Between OPEC meetings and the Bank of Canada meeting, this week has the potential to be a really active one for the Canadian dollar. The Canadian dollar usually trades off of a number of factors. One is the strength of the US dollar, one is the strength of the oil price, and then one is expectations of Canadian economic growth and Canadian monetary policy. Of late, the Canadian dollar has been primarily tied to swings in the oil price, and we've just looking here at the chart for this year. I'll start with this one down here. We can see this is the Canadian dollar against the US dollar, which is the price that's most frequently reported in the Canadian media. And we can see we peaked back in the spring about 80 cents, recently bottomed just before the US election in and around 73.5 cents. The Canadian dollar has been starting to recover. It's back up above 75 cents, and it's been challenging 75.50 here. Next resistance up here at the 200-day average about 76.50. Look at this. The RSI shows for the last few months it had been in the doldrums, hanging around below 50. It's cleared 50. Momentum is starting to accelerate upward for the Canadian dollar. However, even though the Canadian dollar is picking up, it hasn't been as fast as the oil price. We're going to show the oil price chart here next. We can see, look at this. Oil bottomed out here with a double bottom back in February. It's been steadily recovering. This here, with this low late 2015, this low here, this is a massive head and shoulders bottom forming. On top of this, this last leg here is an ascending triangle forming. Lots of big bullish technical patterns starting to form in the crude oil price. In the last few days, since the OPEC meeting, we've seen the oil price spike. However, we've not seen a spike in the Canadian dollar. The reason I think we're not seeing the spike in the Loonie is because people are waiting for the Bank of Canada meeting, which is on Wednesday the 7th. And I think there's still some people wondering if the Bank of Canada could cut rates or not, and that's what I think is holding the Loonie back. When we look at it here on this chart, you can see this is the Canadian dollar just starting to turn up a little bit, but nothing compared to what crude oil has spiked up in the last week or so. So there's lots of room for the Loonie to play catch-up in and around the Bank of Canada meeting potentially. So what we're heading for is the Bank of Canada. The current interest rate in Canada is about 0.5%. And what people are looking at is that every major resource exporting country in the world, except for Canada, has cut interest rates this year. This is the Bank of Canada's last chance to join that parade, should they want to. The Bank of Canada held off, though, in the summer. They said we had that huge problem with the Alberta wildfires back in May destroyed a big chunk of the town of Fort McMurray and also blew a huge hole in the Canadian economy for about a month. Now, the Bank of Canada said, we recognize this as a one-time event. We think the economy is going to bounce back. We think the U.S. is going to pick up. We think the lower Loonie will help the economy. And they felt that reconstruction of Fort McMurray would also help the economy. All through the late summer, people were kind of going, yeah, I don't know, when we saw the Canadian economic data coming out. But recently, Canadian GDP, very strong. Q2 GDP revised to a not as bad a number as people had previously thought. So overall, Canadian economy is doing a little bit better. There's no reason right now for the Bank of Canada to cut interest rates. They would much rather, and they've said this several times, they'd rather let the Loonie do the heavy lifting. But in this case, they don't need to cut rates right now. It would be a surprise if they did cut rates. However, because there's still that lingering possibility, the street is still holding off and waiting. However, I do think you see, if the Bank of Canada does not cut interest rates, if the Bank of Canada talks bullishly about the Canadian economy, the Loonie could rally, if nothing else, just to catch up to the move we've seen in the crude oil price. The other thing that could rock the markets this week, there is this meeting later in the week between OPEC and non-OPEC countries. Russia has been a key power broker behind the scenes and a go-between, bringing together a lot of the OPEC members that flatly have been at each other's throats and fighting proxy wars against each other for the last couple of years. So Russia still has a lot of stake in this deal going through. We do expect that things will happen. The surprise would be if for some reason they didn't, or if some reason we didn't get the non-OPEC cuts that people were expecting. But still, overall, it does look as though that could go through, but there is the potential for some choppiness and surprises around that meeting as well. I'm just going to talk about dollar CAD here, which is the one that's more actively traded around the world. We've seen this rallying or driving higher over the last few months meant the Loonie was weakening. However, this 135 to 135.65 range, it's peaked with a small triple top here over the last month. It started to roll down. 135 is given way. 134 is given way. It's trading in and around 133 here, this Fibonacci level here. If that gets broken, we're looking at 132, and then the next support down here in and around the 130 round number. RSI showing that momentum, which had been positive for much of the year, has rolled over. It's broken the 50, downward pressure increasing, momentum accelerating to the downside. So overall, this pattern suggests that the Loonie, the dollar CAD, is rolling over as CAD US dollar starts to pick up.